Students, now let's have a look chapter 2, which is cost concept and classifications. Uh, the concept of cost. The term cost has a variety of interpretations in common use. In ordinary use, it refers to the period for something. It is the in ordinary sense, it refers to the price paid for something. But in cost accounting, it is different to the price. So, according to the Institute's Cost of Management Account, London, cost can be defined as amount of expenditure, actual or nominated, incurred on or attributable to a given price or a given thing. According to the Horngreen, Sundance, and Stranton, cost may be defined as the sacrifice of giving up resources for a particular purpose. Cost is frequently measured by monetary units that must be paid for goods and services. Importance of cost. The importance of cost is, the very first one is preparation of business plan. Second is achievement of business goal. Third, helps in competitions. Fourth, fixations of selling price. And fifth, evaluations of performance. So let's have a look. The basic concept of cost, item relating to the cost concept. The first one is expenses, and second one is loss. Third one is cost center. Fourth is profit center, and fifth is cost unit. According to the Charter Institute of Management Accountant (CIMA), one defines cost unit as a quantitative units of product or service in relation to which cost is ascertained. And the last one is cost driver. Now let's have a look the classifications of cost. Cost is divided on the basis of various elements. The very first one is on the basis of identifications of elements of cost. So under this one, the first one is material. Material is known as direct material and indirect material. What is direct material? Direct material means the material which form part of finished output and can be identified with the finished product easily. And indirect material cost refers to the material cost which can be allocated but can be apportioned to or absorbed by cost center or cost units. Second one is labor. Labor is needed to convert the raw material into finished products. It also needed to supply the goods in the hand of ultimate consumer. It can further be divided into two types of given as below, which is direct labor and indirect labor. The direct labor is the workforce which is directly involved on the productions. It refers to the labor cost which can be identified with the allocations to cost center or unit cost or cost units. Second one is indirect labor cost. It refers to the cost or wage which cannot be allocated but can be apportioned to or absorbed by cost center or units. Third one is other expenses. The other expenses can be divided into two groups, which is direct and indirect. Direct expenses, these expenses are also called chargeable expenses. They are the expenses other than direct material and direct cost and can be identified with and allocated to the cost centers or cost units. Indirect expenses. Indirect expenses refers to the expenses which cannot be allocated but can be apportioned to or absorbed by cost centers or cost units. Now let's have a look the cost on the basis of functions. On the basis of functions, there is productions or manufacturing cost. Manufacturing cost includes all the direct material, direct labor, direct expenses, and manufacturing expenses. Second is administration's cost. It is incurred by carrying the administrative functions of the organizations. That is cost of policy formulations and its implementation to attain the objectives of organizations. Third one is sellings and distribution cost. The selling cost refers to the cost of selling functions, that is, the cost of activities relating to the create and stimulate demands for companies' products and to customers. And third and last one, fourth last one is research and development cost. The research cost is the cost of researching for new products, a new manufacturing process, improvements of existing products, a process or equipment, and development cost is the cost of putting research results on commercial basis. Let's have a look. Cost is defined on the basis of behavior as well. So on the basis of behavior, the first one is fixed cost. The cost whose total amount remains constant up to the certain capacity is called fixed cost. Feature of fixed cost: the amount of fixed cost is never zero, even though the production is zero. Second, the amount of fixed cost is constant up to a certain range. Per unit fixed cost changes in opposite directions of production unit. Fixed costs are either capacity cost or periodic cost or the committed cost. Fifth, fixed costs cannot be controlled in short-term period, and fourth, generally fixed costs are unavoidable and uncontrollable cost. And the another Another classification is variable cost. The cost that changes proportionately with the change in the output is known as variable cost. An increase in the volume means a proportionate increase in the total variable cost, and decrease in volume will lead to the proportionate decline in the total variable cost. There is a linear relationship between volume and variable cost. The per unit variable cost is always constant. Features of variable cost: per unit variable cost remains constant. When the production is zero, then the total amount of variable cost is also zero, but per unit variable cost will never be zero. Third, total amount of variable cost changes according to the change in the level of productions. And fifth, variable cost is controllable costs. Third number, semi-variable cost. The costs which are neither perfectly variable nor absolutely fixed in relation to change in the volume are called semi-variable or fixed or mixed cost. Neither total total amount nor per unit cost of semi-variable cost remains constant. Features of semi-variable cost: neither total amount nor per cost remains constant. Second, semi-variable cost never can be zero. Third, when the level of production increases, the total amount of semi-variable cost also increases, but per unit semi-variable cost decreases and vice versa. Fourth, semi-variable cost remains constant up to the certain level of output, after which it becomes variable. And the last one, fifth, is both the total and per unit semi-variable cost changes when the volume of output fluctuating. And lastly, on the basis of decisions. And another is on the basis of decision making. On the basis of decision making, the first one is relevant and irrelevant cost. So, relevant costs are those costs which are affected by the action and decisions of management. If the management changes the decisions, this cost will also changes. On the other hand, the costs which are not affected by the actions and decisions of the management are irrelevant costs. Irrelevant costs are ignored in decisions making. The example of costs are given in the following table. Managerial decisions. A public company is currently avoidable and unavoidable cost. Avoidable costs are those costs that can be reduced or avoided by adopting a new alternatives, whereas unavoidable costs cannot be altered. Therefore, only avoidable costs are relevant for decision-making purpose. For example, if a restaurant and third is opportunity cost. The sacrifice of benefits due to the selections of new alternative is called an opportunity cost. The concept of opportunity cost has another is managerial cost. Managerial cost is the additions cost to the product's cost to produce extra unit of output, and E is differential cost. A differential cost, a differential in cost between any two alternatives is known as differential cost. It may be incremental or decremental. Differential costs are relevant for decision making. Incremental costs are increase in cost due to change in decision, whereas decremental costs are reduction in cost. On the basis of controllability, cost can be controllable cost. The cost subject to control and substantial influence of of a particular manager or individual is called controllable cost. The cost that can be changed or altered by action of specific manager is treated as controllable cost. Uncontrollable cost. Cost that is not subject to influence by the action of manager is called uncontrollable cost. These costs remain unchanged. On the basis of time recording, first is historical cost. Historical costs are ascertained after they have been incurred. Historical costs are the actual cost. These costs are not available until after the completions of the manufacturing operations. Predetermined cost. Predetermined costs are future cost which is ascertained in advance of productions on the basis of specifications of all factors affecting cost. These costs are also known as budgeted or estimated cost. And on the basis of associations with product, um, period cost. Period costs are the costs which are not identified with products or job and are deducted as expenses during the period in which they are incurred. They are not carried forward as a part of value of inventory to the next accounting period. Another is product cost. Product costs are those which are identified with the product and included in inventory values. In other words, the costs that are incurred in the cost of manufacturing a product are called product costs. Concept of cost segregations. The process of The process of separating the semi-variable cost into variable and fixed cost is known as segregations of semi-variable cost. The reason for the segregations of the semi-variable cost are mentioned below. Segregation helps to calculate the selling price of the extra output. The fixed cost does not increase with the extra output, and the selling price is total variable cost plus profit, if any, uh, if any. It also helps to control. It also helps to control the variable cost. Uh, the semi-variable cost should be segregated to variable and fixed components since the fixed cost cannot be controlled. It aids the management of decisions making. Since most of the managerial decisions are based on the marginal costing, it is necessary to separate the semi-variable cost into fixed and variable cost. Okay, the method of cost segregations. Cost can be segregated in two ways. First is high-low point method, and second is least square method. Now let's have a look uh, one by one. High-low point method. Under this method, we have a formula here, a variable cost per unit, which is known as B, is find out as high cost minus low cost high cost and low cost, divide by high activity or units minus low activity or unit. Then after that we find out fixed cost known as FC is equal to total cost minus variable cost per unit multiplied by activity level or simply y minus bx. Then finally and lastly we will have a look cost equation by total cost plus variable cost, total cost plus variable cost output unit or A is equal to bx. Uh, to clarify this concept, I have taken one example here. Example is the production unit, and this is mixed cost. Uh, in the production unit, it is 1000, 2000, 3000, and 4000, and mixed cost is 2000 rupees, 3000 rupees, 4000 rupees, and 5000 rupees. And it is asking segregate the mixed cost into fixed cost and variable cost and compute the total cost for 7000 units. So let's segregate. So let's find out what we have here. We have here um, solution given. What is given here? High cost, high cost is equal to, if you look at the high cost is 5000. High unit is obviously 4000. And let's have a look low cost. Low cost is over here is 2000. Then low unit is equal to uh, obviously 1000. Now let's use the formula here, calculations of variable cost per unit. We have a formula here, if you remember earlier, high cost minus low cost, then high unit minus low unit. As we're given here, high cost is rupees 5000 and low cost is rupees 2000, divided by high unit is 4000, then a low unit is 1000 unit. In this way we get the value here is 5000 minus 3000, then 4000 minus 1000 is 3,000. So we get here variable cost is rupees 1. Now in second step, uh, we have to find out, it is asking to find out the calculations of total fixed cost. How do we find out that? We have the formula here, A is equal to total cost minus variable cost per unit multiplied by production unit. Uh, for high output, that is 4,000 unit, total cost is rupees 5,000. If we look in the question here, the total cost is 5,000 when the production unit is 4,000. That's given here. So the total cost would be 5,000 here, rupees 5,000. Then we know we have already calculated the variable cost per unit. Earlier is rupees 1. Rupees 1 multiplied by, in the questions, the production unit is total cost for production units is 7,000 unit. So 7,000 unit. And the unit here is 4,000, which is 4,000. So rupees 5,000 minus 4,000. We get here rupees 1,000 as fixed cost. Now let's calculate thirdly, calculations of fixed total cost for the output of 7,000 unit, because in the question it is asking that total cost for 7,000 unit. So we know that total cost is equal to fixed cost plus variable cost. So fixed cost we just calculated here, rupees 1,000. Then variable cost, how do we find out variable cost? We find out variable cost per unit multiplied by output. Rupees 1,000 plus variable cost per unit, we already find out rupees 1, and output is 7,000 unit. So rupees 1,000 and it is 7,000. In this way, total rupees 8,000. 1 plus 7 is 8,000 rupees is our total cost. Now let's have a look at another method, which is known as least square method. First of all, the first step is we create the table. Second step is we find out the variable cost by following formula. The variable cost per unit is find out n summation xy summation x summation y divided by and summation x square minus summation x whole square. And thirdly, we find out the fixed cost. Is fixed cost, or A is equal to find out is summation y minus b summation x divided by n. And the final fourth step is find out the total cost. Obviously, we know that total cost is equal to fixed cost plus variable cost, uh, or y is equal to a plus bx. So now let's have a look the same example here we did earlier. So we will use this as our question. Uh, let's solve this problem. So what we're going to do first is we're going to create the table. The first one is production unit. Production unit or X. Second is mixed cost, which is Y, X, Y, and X square. We know that the production unit is given here in the question, is 1000, 2000, 3000, and 4000. Then mixed cost is 2000 rupees. It is given in rupees. 3000, 4000, and 5000. Now let's in the third column, let's multiply this xy. That means multiply the production unit with fixed cost, mixed cost. So 1000 multiplied by 2000 is 200,000. Then 20 million. So let's multiply this. 6 is 3000 multiplied by 4000 is 12, and 4000 multiplied by 5000 is, we get here. And in the last column, we find out the square of x. So power square of 1000 is, power square of 1000 is, we get here 1000, 100. Power square of 2000 is, get here 4, 1, 2, 3, 1, 2, 3. 3 power square of 3000 is 9. And the 4000 power square is equal to, we find out is 16. So over here we will find out, we will add all of this. Summation x is total 1 3 6 10. So 10,000. Summation y is equal to, let's add all of this, then 5 5 4 9 9 5 14. Then we add here summation xy We get here summation xy is total of this. With total, we get the value as 40, 2, 3, 1, 2, 3. Then finally, we do here uh, summation x square is 1, 2, 3, 1, 2, 3. Now let's find out one by one value here. First of all, we calculate here. We will find out value is variable cost per unit. We have a formula here to calculate the variable cost per unit is equal to n n summation xy minus summation x summation y divided by n summation x square minus summation x square whole square. So let's put the value here. N is the number of observation, which is 1, 2, 3, 4, 4, and n summation xy is this value here, which is 4, 0, 1, 2, 3, 1, 2, 3, minus summation x is 10,000 and summation y is 14,000, divide by uh, n is equal to 4. Then we get here minus summation x whole square is, we know that the summation x is 10,000 and is whole square. In this way, we get the value. If you calculate over here, we get the value of rupees 1. Now let's calculate the fixed cost. To calculate fixed cost, we have a formula here, which is A is equal to summation y minus b summation x divided by n. Summation y is, we know that 14,000. B is obviously the variable cost, which was calculated earlier is 1, rupees 1, and summation x is 10,000 divided by number of component is 4. So 14,000 minus 10,000 divided by 4, which is 4,000 divided by 4 is rupees 1,000 is our fixed cost. Then finally, let's calculate. Let's calculate calculations of total cost. Total cost, we have a formula here. Total cost is equal to fixed cost plus variable cost. For fixed cost, we just calculated rupees 1,000, and variable cost is variable cost per unit multiplied by unit output. Rupees 1,000 plus variable cost per unit is, we know that rupees 1. Then output is obviously 7,000. So 1,000 plus 7,000 is equal to rupees 8,000 is our total cost.